We may have short-term some little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it.
Good morning from our global headquarters in New York. I'm Manus Cranny. You're welcome to Bloomberg Brief. It's all about tariffs. Prepare for pain. A message from President Trump as he declares an emergency, raising tariffs on Canada, Mexico and China. Goldilocks on steroids interrupted. Stocks drop, dollar rallies and the curve flattens. Havens are bid. And no full sense of security for Europe. The president says, EU, you're up next. And with that in mind, complacency has been exploded, and ground zero for the reaction function is in the FX market. You're looking at the Canadian dollar hitting the lowest level that we've seen in 2 decades. Of course, Canada has gone with an immediate response of tariffs of their own. We're waiting to understand the Mexican response. Down, as you can see, 2.25%. That's the dollar up by 2.25%. This is the lows of 2022. Plan B will be announced today. And the dollar adding 1% overnight. It had its best week since November last week. JP Morgan say increase your shorts, stay bearish on the loonie through 150 and neutralize your short Swiss franc positions to high beta. To the equity markets, this is what we have in the headlines. Goldilocks on steroids essentially interrupted to the extent that complacency. Why is everybody shocked? You were told these tariffs were coming on Friday. But this is about complacency and an exuberant start of correction. Last Monday, it was about DeepSeek. This Monday, it's about tariffs. RBC warned of a 10% equity drawdown. This narrative is building. To the bond market, the short end of the curve, we are actually seeing essentially flatteners, which is a spike at the very short end of the curve as the market begins to talk and utter the word stagflation, rate hikes. And so you have these flatteners abound in the market. We're also keeping an eye on some individual names. Ford, just one of the automakers getting hit by the Trump tariff announcement. Nvidia, also down. You can see Ford down there, 4 1/8. Nvidia down. The chip makers also under pressure this morning. And Coinbase falls as the Trump tariffs spark a sell-off in cryptocurrency. Coinbase down almost 6%. But let's circle back to our top story. President Trump has moved to invoke an emergency and impose tariffs on Canada, Mexico and China starting on Tuesday. Now, the White House said it will apply 25% tariffs on all goods from Canada and Mexico and a 10% levy on China. We've seen the market reaction, as I've just shown to you. The countries involved have reacted as well. Here's the Canadian Prime Minister, Justin Trudeau.
Tonight, I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives.
Mexican President Claudia Sheinbaum responding on a video on X. Now, she said, quote, this: "We have to act with a cool head and love for the people." The response from China, slightly more muted. The Commerce Ministry issuing a statement vowing countermeasures, calling on the U.S. to manage the differences on the basis of equality, mutual benefit and mutual respect. But it didn't end there. President Trump outlined his plans for further tariffs for the European Union.
It will definitely happen with the European Union, I can tell you that, because they've really taken advantage of us. And, you know, we have over a $300 billion deficit. I wouldn't say there's a timeline, but it's going to be pretty soon.
Pleased to say we're joined now by our trade czar, Brendan Murray, who leads the global coverage for trade. Brendan, good to have you with me. Trump hoping to impose these levies, or, you know, what exactly? He's leaning into a 1970s international emergency economic power to do this. He's warning it's not just these tariffs but there is a risk of escalation here as well.
Yeah, absolutely. This could be just the first shot of a multi-front trade war that we could see. Really, the goal here is to put as much economic pressure as he can on Canada and Mexico, and to a lesser degree China, and to have them cave to his demands over the next week or two. If it goes on much longer than that, the U.S. economy, the Canadian economy, and the Mexican economy are all going to suffer. A couple of economists we've talked to say, Canada and Mexico would be in a recession by the third quarter if this lasts this long. So the damage to consumers and to companies is being tallied up at the moment, and the numbers are big.
Brendan, the risk is a potential recession in Canada. The interesting thing is this: tariffs are either paid for by us, the consumer, in the end, or indeed by letting the currency take up the slack. We're seeing the ground zero reaction function in the currency market. Now, it's interesting. The Chinese allowed their currency to devalue the last time around, whereas Canada's gone straight for retaliation. So this is the juxtaposition for those people who are in his sightline at the moment, isn't it?
Yeah, exactly. That's the currency market acts as sort of a shock absorber, in these situations. But a strong dollar, that sounds like something Americans would want to happen. But if you're exporting goods, a strong dollar makes your products less competitive overseas, and the dollar can get too strong and really add a headwind to American exporters, companies like Boeing that employ a lot of people. So there's a risk of that. There's a risk that a tariff strategy, trade wars that are too aggressive, really tip the balance for not just companies that import goods, but companies that ship them overseas as well.
And of course, and Halima Croft at RBC has put out a note on this. There is no definition of what success is for this Trump administration once they've potentially pulled the trigger and executed these tariffs. Look, the EU will not be spared. We know what's happening with Canada, or what's on the table for Canada and Mexico at the moment. But there's a very serious warning shot for Europe. Where do they stand in terms of being tariffed at the moment, and where are they most exposed?
Yeah, the president has, ever since he was elected back in early November, has said, Europe, you're on the list, and we're coming for you when we get around to it. There's an interesting deadline at the end of this month that, if you remember the steel tariffs from Trump and carried on through Biden, those were suspended a couple of years ago. But they will snap back at the end of February. If nothing is done, if the two sides, the U.S. and Brussels, don't get together and work this out, those tariffs, will come back at the end of this month. Now, it's not a huge amount of economic impact there, but it could set the tone for the broader discussion about whether they can negotiate their way out of a trade war or not. Those steel tariffs, right around the corner, basically.
OK, it certainly is a tense time for everybody. Brendan, thank you very much. Brendan Murray there with the very latest details on the tariffs. My guest this morning is Lucy Baldwin, Global Head of Research over at Citi. Lucy, good morning. The world wakens up with a bit of a reality check on really how fierce Donald Trump Mark II tariffs are going to be. Are you still convinced that these are short-term negotiation tactics?
Well, it's certainly going to test those nerves, isn't it? As you say, I think obviously Trump 1.0, everybody was told to take him seriously, but not literally. And now we're all questioning whether actually this time around we need to take him rather more literally. Our view is really that economics will prevail. And as you've outlined already, if you were to put these tariffs in place with Canada and Mexico to the back end of this year, it would likely tip both those economies into recession. And he's obviously starting with two of his nearest partners, one of which, as you know, right, is a huge ally. So it's an unusual, perhaps, starting point for the tariffs. And our view had always been that Europe and China would see probably more pain and more quickly, whereas Whereas, of course, what we're seeing here is a slightly different sequencing than many had predicted, but nonetheless pretty material. But of course, to the comments you've made, right, the impact to US growth and inflation is likely to be significant if these are fully enacted, and obviously enacted as quickly as we think, i.e. over the course of the next 24 hours. Very little room there for real negotiation. So yes, it would have a pretty material impact on growth and on inflation, and consequently on our earnings forecasts for many key stocks in many key sectors.
Well, the risk of growth here is 1.2% on GDP and a knock up of 0.7% on the inflation. So let's delve into the earnings side. Bloomberg has run some of the numbers. Margins, I mean, margins can come under significant pressure because there's an inelasticity on the consumer. We've been through so much. Our capacity to bear more price rises is more limited. So take me through the exposures that need to be trimmed on that risk.
Well, I think you have to look very much stock by stock, sector by sector, because at the moment forecasts for this next 12 months are for gross margins almost across the US market to go up quite materially. The market is expecting around 13% earnings growth across the S&P. Obviously, with names like the Mag 7, that's more like 20% plus forecast earnings growth. And so a number of those numbers would have to be looked at again. But again, the challenge we have right now is the level of detail, because it's not just the tariffs that get imposed, it's obviously the retaliation. You've got those series of negative demand and supply shocks that would start to hit. You know, when we looked, again, very broad brush, a few weeks ago at the likely impact of some broader scale tariffs, we talked about the potential to halve that earnings growth, so from 13% to more like 6% earnings growth this year. And that, of course, would be a pretty big headwind for the market. And one of the reasons why we have got a bear case scenario for the S&P of 5,100, which is significantly more downside than our bull case forecast of 6,900 is upside, is exactly because of these asymmetric risks that you see as a consequence of tariffs and retaliation around the world. And hence our view to clients is to think about being broadly diversified, not overly concentrated either in the US market or indeed with any particular sectors. So I think you have to look pretty carefully, but it should mean at least that it's a good year for stock picking given the complexities of this situation.
Absolutely. Well, look, if Danny was here, she'd berate me if I went straight to the 5,100 call. So I want to pivot to the 6,900. I want to pivot to how do we off-ramp it? What is the definition for you in the market that says, OK, this is not going to be as bad? Halima Croft makes the point there is a lack of definition of what success is. If you get a roadmap of technical points to de-escalate, does that shift me back to 6,900 quicker than I get to 5,100?
Yes, I think, you know, to get to 6,900, right, there's an awful lot baked in terms of the AI story as well. I think there's a bull case that has emerged post what we've seen last week there, which is that ultimately there are more efficient models that can be generated, as we've seen coming out of China. That could be a good story. It could mean that the returns on some of that capex spend in that space that people had been questioning for a period of time are higher, which would be good news, and that the take-up could be more material and quicker for AI, and that could spur on earnings growth across more than just the Mag 7, that broadening out thesis. And really that's what you need to see, because that 6,900 bull case is all about the other 493 really starting to see north of 11, 12% earnings growth this year, which of course is an acceleration from what they have seen. But it's also one of the reasons why we actually really still quite like Europe here as a diversifier, albeit the risks around that have just got a little higher over the course of the last few days, for sure.
Well, for anybody that's tuning in that has missed the barrage of flow, $1.3 trillion, 43% of the imports of the United States of America, 5% of GDP is now under the spectre of tariffs. Lucy, thank you very much. That's Lucy Baldwin from Citi. First take on those tariffs. Other stories trending on your Bloomberg terminal. This is what we've got for you. Julius Baer's new CEO announces a major overhaul of the bank's leadership, cutting 400 jobs. The executive board will be reduced to 5 members from 15 and seek an additional $120 million in annual cost savings. The focus to cut costs matches concerns raised by analysts in recent quarters. Crypto traders responded to President Trump's tariffs, causing Ether to fall as much as 27% and Bitcoin to drop by 6%. The negative sentiment in markets also affected smaller tokens, with some posting even steeper losses. The crypto market's total value dropped by $360 billion. Beyoncé took home the Album of the Year award for Cowboy Carter at the Grammys last night, although she has won the most Grammys of any artist in history. This was the first time that she had gotten the top prize. She also won the award for Best Country Album. The first black artist has won that in that category. Coming up on the show, Panama promises free passage for U.S. warships as State Secretary Marco Rubio returns from his visit. The details next on Bloomberg.
We lost 38,000 people building the Panama Canal, one of the great wonders of the world. And what happens? China owns it all of a sudden? It's not going to happen. We're not going to let that happen.
Well, Panama promised free passage for U.S. warships through the Panama Canal as the Secretary of State, Marco Rubio, met with the country's president. Let's bring in Kevin Whitelaw on the story. Kevin, if we take the tariff execution policy, it certainly lays the table for a much more aggressive foreign policy. Rubio has returned with some serious compromises and concessions from Panama. What are they?
Well, you know, as of now, we understand that the Panama is going to allow U.S. Navy warships to pass through free of charge. That had been one of the complaints. They also said they're going to start getting rid of some of the Chinese role in sort of helping to manage elements of the port and elements of the canal. That's a little less clear. We're going to have to understand what that means exactly. More importantly, that's what's ultimately going to satisfy Donald Trump on this issue or not. His end game on this is a little unclear. He has talked about the cost. He has talked about Chinese influence. But he's also somehow suggested that it really should be under U.S. control, which is something that he continues to reject.
Yeah, well, they're withdrawing from that Belt and Road Initiative. Again, this goes back to spheres of influence to the north and the south, and that sort of seems to come through from a number of different notes that I have read. Let's talk about the Elon Musk and Doge. We're given to understand that he has developed some kind of access to Treasury payments. Now, there's been serious questions raised here. You've got Democrats, Senator Warren, talking in the New York Times in a letter to the Treasury Secretary. The Democratic senator warned against the meddling with the system for processing trillions of transactions. So what exactly do we understand that Elon Musk has had access to, and what is he actually starting out with?
Well, you know, when it comes to this Treasury thing, we're obviously still trying to make sense of it. But it does appear that Elon Musk, even though he's not an official member of the government, doesn't have an actual, formal role in the government, does now have access to this payment system. And this is essentially the government's checkbook. And this is the system that issues the cash to contractors and vendors and other, people the U.S. government is doing business with. These are all payments that have obviously been money that was approved by Congress. It was payments that have been authorized by federal agencies. And so this Treasury Department office is really not sort of an approval zone. It's a processing zone. But it does appear that Musk is and his team have now gotten access to this system and are in the position to potentially block some payments on whatever grounds they want. This is really pretty unprecedented territory. And it's something that obviously Democrats are incredibly alarmed about. And we're going to have to see whether Republicans simply go along with this or not. I mean, it does actually have the potential to put some of the U.S. sort of credit and faith at risk, because it really could spark lawsuits as people that are owed money say, hey, what's going on here? Who's doing this?
Elizabeth Warren, in this letter, she said, extraordinarily dangerous to meddle in the critical systems processing trillions of transactions. And she talks about preventing the default on federal debt and ensuring tens of millions of Americans receive their Social Security. OK, let's get to the slate this week, because this is when it gets really hot. You've got RFK Jr. and Tulsi Gabbard. They've been through their initial hearings. The votes are set. If you listen to Bernie Sanders yesterday on the Sundays, he's not particularly happy with RFK.
No, I mean, the Democrats, look, the Democrats don't love any of Donald Trump's picks, but this trio of RFK Jr. and Kash Patel for the FBI, and Tulsi Gabbard for the National Intelligence Director spot, that's really the ones that Democrats are most worried about. They've targeted the most. At this point, it's really not clear that there's going to be 4 Republicans that line up against any one of them, despite an enormous number of misgivings that Republicans are privately expressing.
Okay, it's going to be an interesting week, Kevin. Thank you very much. Kevin Whitelaw there on the very latest on politics from Washington and beyond. A little bit of breaking news for you. The Triumph Group has received a bid from Berkshire Partners to buy Triumph Group. Warburg Pincus, Berkshire Partners to buy Triumph Group. The price tag, $26, stock up 34%. This is what you call breaking news in the midst of the other gloom that you have out there about tariffs. A premium, 38.7% to the January 31st closing price. Go Triumph. From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Manus Craney. Let's set that agenda. Prepare for pain. A message from President Trump as he declares an emergency, raising tariffs on Canada, Mexico and China. Goldilocks on steroids interrupted. Stocks drop, the dollar rallies, the curve flattens, havens a bid. And no full sense of security for Europe. The president says to the EU, you're up next. Let's get straight to the reaction function in the currency markets. You're looking at the dollar adding an additional 1%. If we were up 1% last week, this is a real sort of haven. Short end of the curve is moving higher. Canadian dollar at a 2-decade low. They've gone for immediate retaliatory tariffs on $100 billion worth of goods. Mexico, let's see what the plan B is, but you're touching the 2022 lows. Right now, this is complacency being exploded. JP Morgan have a very clear note. You want to stay bearish on the loonie. 2, the Goldilocks on steroids challenge. It's in the equity market. This is where complacency has perhaps been less interrupted than the FX market, but RBC warned that the US equity market drawdown could be on the way, maybe 10%. We caught up with Citi earlier on. They still say the bear case is 5,100 on the downside if these are enduring tariffs. NASDAQ down 1.7%, and the euro dollar, as you can see, down 1.2%. Curve flatteners and stagflation are the narrative for the bond market. Short end of the curve spikes by 7 basis points now. So in the first 30 minutes of this show, we've moved higher again on the short end of the curve. The flattening is definitely very, very present. The main story of the day, President Trump has unleashed, as he promised, tariffs. Starting on Tuesday, the White House said it will apply 25% tariffs on goods from Canada and Mexico, 10% levy on China. Here's what he told reporters.
We may have short-term some little pain, and people understand that, but long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it.
Team coverage starts right now. Divya Balji in Toronto, Creighton Harrison in Mexico City, and Karen in Washington. Straight to Washington. And good morning. When I look at the speed, this is a president leaning into legislation from the 1970s, going straight for an emergency, and indeed not even a consultation period as we had before. This is much more aggressive than the Trump 1 tariffs.
Yes, the pace and the breadth of it, man, certainly is striking. What's interesting is the 25% tariffs on Mexico and Canada covers the range of goods. So it's goods that go into the typical household basket. That's food, it's clothing, it's apparel, it's electronics. Then, of course, you go into the industrial sector, aluminium, bauxite, the car parts. Now, there is some concession in terms of energy from Canada. That's going to be levied at around 10%. We don't have full details on that yet, but that's what the signalling is. But the breadth of those tariffs touching the full basket suggests that, to economists at least, that buyers and sellers won't be able to absorb all of that new duty. It will be passed on both to households and businesses, and that's where there's concern that this could add to the inflationary side of things. And then the second round effect is what does it mean for business confidence and investment? President Trump, of course, is clear. He says it's important for to control fentanyl and immigration and to rebalance the trade books with both Mexico and Canada. But lots of question marks in terms of how this will impact the economy from here.
But here's where it evolves, though, Enda. This is about whether it's tactical bashing or whether it's something much more enduring. He needs $5 trillion to extend the tax cuts. Tariffs would give him $2.3 trillion over 10 years. That's the risk here.
Yeah, there's no doubt about it that I think, broadly speaking, the market had been expecting tariffs to be something of a negotiating stroke leverage tool. And in fact, some of his own incoming officials had made that point explicitly, that tariffs are a negotiating tool. But here we are now with tariffs implemented as the president had been signalling throughout his campaign. The question becomes you have, say, Goldman Sachs, for example, they think these tariffs will be short-lived, but there's a bigger picture going on, even apart from the near-term fentanyl and immigration story. You have the broader US, Canada, Mexico trade agreement that's up for negotiation next year. This is considered to be just really the very beginning, starting of that process. And of course, on the China side, with the tariffs that have gone on China, we know the president is consistently hawkish on trade, the trade deficit with China. That's obviously a process that's going to take a long time as well. So very much a feeling, I think, that we are at the beginning of this trade story.
Divya, I want to take it to you. We're waiting to hear the response mechanism from Mexico. Claudia Sheinbaum talks about a cool-headed approach here. What will a cool-headed approach look like relative to Canada's $100 billion retaliatory tariffs?
Yeah, I think some people would say that right now this could actually be seen as a cool-headed approach for Canada. The first $30 billion worth of goods are going into this so-called trade war and tariff action right away. Those goods are getting taxed at 25%. Then there's a 21-day consultation period to bring on the rest of the $70+ billion worth of goods. So perhaps that's the way of looking at it. Canada has gone on and on talking about how they are trying to be very purposeful and thoughtful about how they're going to handle this, but they will push back. And I think that's the key here. When you look at how the U.S. has done it, hitting the energy sector, Enda has already said, clearly we need more information, but even one of our biggest refiners, where a whole bulk of their products do go to the U.S., has already said that they're pushing their prices higher. So it is going to impact the country. Prices are going up. This retaliatory effort, which hits alcohol, U.S. alcohol in particular, we're seeing that right away across government-controlled liquor stores in Ontario. They're pulling all U.S. alcohol off of the shelves. So those measures are happening, but, I don't think a lot of this comes as a surprise, considering the lead up to this announcement in and of itself. The only other thing I would add is the fact that, Trump and Trudeau are supposed to talk this morning. So they do have about 18 hours to sort of figure this out and perhaps pull back a little bit, or maybe I'm just being a bit too hopeful.
Well, hope lives eternal. Creighton, let's take it to you. Mexico, as I say, my apologies there, calling for cooler heads. The risk here is, of course, it's about, acquiescing to what Trump wants at the border. This is more about border policy, perhaps, than trade policy, isn't it?
Well, that's what Trump has made it about this whole time. It's about migration and fentanyl, and he wants Mexico and Canada to fix those issues, which are more Mexico's problems really than Canada's, before he will consider getting rid of tariffs. Obviously, those are intractable problems that would take years to, quote unquote, fix. So the question is, what would he want right away? Is there anything that Mexico can do to avert these tariffs? President Sheinbaum here in Mexico is also expected to speak with President Trump today, and will make her last-ditch pitch. As you said, she's tried to keep a cooler head on this. We still don't know exactly what tariffs, retaliatory tariffs she will announce, but she is expected to make some today. But we're also expecting her to continue to make conciliatory efforts. She's talked a lot about working groups on the border, working groups on security that she wants to establish with the U.S. and Canada. So I would expect more of a mixed approach of some carrot and stick today.
In terms of the trade agreement, the Mexico-Canada trade agreement, the USMCA that was signed in 2020, is that just consigned to history now? And that we will end up with something materially different, because this is about spheres of influence to the north and to the south for the United States of America.
I mean, I'm happy to take that. The Canadian USMCA, from Mexico's perspective, it's now been considered set aside. That's the words that they use, set aside, which means for the moment, obviously, President Trump is not respecting it. It's a free trade agreement. So they consider it sort of frozen and, of course, still available to be renegotiated to work this out.
Okay, you know what? Let's draw a concluding line under that for now, because I think we're going to see progress over the next 24 hours when these tariffs go live. Divya Balji, Enda Karen, Creighton Harrison, thank you for joining me. And joining me around the desk this morning is Blake Gwinn, head of US rate strategy over at RBC. Good morning to you. You had a busy Sunday reevaluating, and I think you've been very honest. You sort of said, look, you were sanguine about the tariffs all the way up until probably yesterday when you had to start to rewrite the narrative. How has that shifted? Let's just start with a broad.
Yeah, and I don't think I'm alone. I mean, we were pretty positive on the rest this year. We've had a very hawkish, out of consensus Fed call. A lot of that was premised on the fact that, you know, these tariffs would be more bark than bite, and that what you'd really be left with is accommodative fiscal policy, deregulation, you know, cut back in immigration. All those things would really be tailwinds for both growth and inflation. So that was really driving our narrative. But we had said in our year ahead that, you know, this was the big uncertainty. Tariffs, trade war, that was the big uncertainty. I see that more as a downside growth risk. I'm a little bit less worried about the inflation risks.
But that downside growth is dependent on how enduring these tariffs are.
Exactly. And that is the very difficult part, because I think, as you've heard, it's not really clear what the exit ramp is at this point. Is it about fentanyl? Is it about reorganizing global trade? It's very tough to tell at this point. If we don't have a clear exit point, you know, for these tariffs, it gets harder and harder to see how we're going to back out of this, especially when we're talking about expanding them, not taking them back.
Well, there is that escalation clause in there as well. The immediate response in the bond market, which is your world of expertise, is this stagflation angst and flatteners. You just look at that short end of the curve. Contextualize stagflation, the risk of stagflation, because that's what the bond market is grappling with this morning.
Well, I mean, that is a very real risk, but I will say I'm a little bit surprised by the reaction this morning, the early overnight reaction, just because in 2019, you know, some of the worst days for trade headlines, the week after, we would actually tend to bull steepen. So the front end really starts to price those downside risks. And I think, I personally wouldn't be surprised if that reaction starts to shift a little bit as we move through the week. We start focusing a little bit more on those downside risks. I think even up to this point, there's many like me out there who were very positive on this thing. And I think even now you have people that are kind of hoping this is going to be a very short-lived episode. You know, we're going to find a way to get away from these, whether it's some kind of border control issues on fentanyl, whatever it is. We will find a way to get out of these in very short order. So I think that, that hope is going to start to erode as we get further into the week.
But then this translates itself into short-end curve trading, which is about pivoting from a tail risk of no hikes to hikes from the Federal Reserve. That's what the market begins to front run now, isn't it?
Yeah, but I actually see more risks to the downside. I think the Fed's a little bit more dismissive of some of those price pressures. I think as long as it's the direct impact of tariffs that are being worked into the products that are covered by these tariffs, I think the Fed's somewhat dismissive of that. That's kind of a one-time shock. Rate hikes probably aren't the right tool for that. I think what they're probably looking for on the inflation side is really more signs that this is spilling over into non-tariff goods.
But the risk is this. It's tariff step one, deportations and immigration policy step two. So that's a supply side, a material supply side economic shock, followed by a risk that we have to carry the cost of these tariffs ourselves, and our ability to carry that is more limited.
Yeah, and I agree. The immigration side, to me, is actually one of the under-talked stories through this whole thing. I think we've been very focused on tariffs because of the uncertainty around them. The much bigger certainty is on immigration, and I think that's really where you get the wage pressure that the Fed would be much more concerned about. As I said, I think they would kind of look through any direct impact on tariff goods. It's very hard for them to ignore wage pressure, and that's going to come from the immigration side. The downside growth risks, though, I think are very real, and I think the Fed is much more reactive, much more likely to use their tools to address downside growth. If we start to see demand getting eroded by higher, clothing costs, higher gas prices, higher food prices, to the extent that hits demand, I think if we see a tightening in financial conditions, that's where you see the Fed starting to get a little bit more worried.
Look, part of what you've had to try and do is to recalibrate your thinking about these tariffs. When does it go from tactical to material impact? Is there a kind of timeline on that, or is that just put your finger in the wind and sort of, I'm not sure?
I'm not sure. You say recalibrate, it's almost like uncalibrate. Just become open to whatever the headlines are on any given day, because I think we've tried to have this forward-looking view. It's very difficult. I mean, to have kind of a year-out view when you have multiple moving parts. You don't know where tariffs are going to be in 3 to 6 months, but also the economic impact of those tariffs and how it's going to affect both the growth and inflation side. That's uncertain as well. So even if you knew where tariffs were going, you'd still have uncertainty around what that means for the economy.
Look, the reaction function has been in the dollar in the very first instance. It's up 2% now in the space of 6 trading days. That, to me, says that that's the much more prescient reaction function to focus on.
Yeah, and again, to those downside growth risks, I mean, I do worry that one thing the Fed will be looking at is, does that stronger dollar make it more difficult for U.S. manufacturers of global trade goods? We do still manufacture some things in this country and trade them internationally. So, it's a possibility that you throw on counter tariffs from some of these other regions. That could be a downside risk to our growth.
Okay. Let's see what happens. Yeah, I mean, at the moment it's 1.2% of a GDP hit and 0.7% on the PCE, and that's the starting point of this discussion. Blake, thank you very much. Blake Gwinn of RBC Capital Markets on the very first take of tariffs, which go live this evening on Canada, Mexico, and China. It is Bloomberg Brief. Good morning to you. It's Menace Craney here in New York. We're recalibrating on these markets at the prospect of tariffs going live tonight on Canada, Mexico, and China. 25% is the number. Technology also under pressure. Chips will be next on the line in terms of the target. S&P 500 down 1.4%. Energy has a small carve-out. It will be at 10% from Canada and not the 25% as we've seen. But we want to dig a little bit deeper into this. As you can see, the broad prospect is for a drawdown here. 40% of imported goods, around 1.35 trillion, will be affected. Let's talk about the sectors getting hit. Jan Patrick Barnett joins me. Jan Patrick, just in terms of the autos, let's start there. 2024, this country imported 3.6 million cars from Canada and Mexico, and the parts go backwards and forwards. That is ground zero for reaction this morning. Let's kick it off there.
Yeah, absolutely. That's one of the sectors that is most hit. If you look at the pre-market trading in General Motors, in Ford, this is like pretty deep red numbers that we are seeing there, and that makes kind of sense with them like producing in Mexico and like being retaliated potentially when they are exporting cars outside of the US. So that's a sector that is definitely being hit, and that's the big difference this morning compared to last week where we had like the DeepSeek episode, which was like very contained into one sector. Now we have a market move and a risk-off move that is much more broader, that is hitting like bellwether stocks, even like stocks like Boeing are going down, and that's I guess like the symptomatic of today's move, that we are seeing the market going deep red and repricing stocks that are usually not like very susceptible to big swings.
Yeah, I mean, what, 22% of the total autos sold in this country now under the prospect of tariffs. So it really does change. We're showing NVIDIA. Obviously, a week ago, we were talking about DeepSeek, and that was the day in which NVIDIA wiped out nearly $600 billion worth of market cap. Talk me through the narrative for chips and the flow.
Yeah, I mean, like chips is like basically the same like every other sector that has stuff floating around the world, right? If you are a sector that is like exporting a lot of stuff, and on the other hand also like importing a lot of machinery that you need to produce those products, you get hit a lot this morning. And I guess like for the chips, it's especially bad because like the DeepSeek episode, as you mentioned, is just like a week ago, and now you have like 2 strikes of negative sentiment towards that sector within a week, and that's usually not something that bodes well, especially if arguably the market or that sector is like pretty expensive or has become pretty expensive over the last 2 years. So that's a big question mark how like investors will like treat that sector going forward in the next couple of weeks. Will they still stick to it and keep their growth optimism up, or is this now a turning point for that sector where we feel like, okay, we take some money off the table, it was a good run the last 2 years, and now we wait and see?
Yep, well, I think everybody's in that recalibration mode of uncertainty. JP, thank you very much on the very latest there with the stock sectors. Oil and gas also gaining this morning as President Trump places hefty tariffs on a whole range of imports. They include crude from Canada and Mexico, and the move threatens to increase the costs for American consumers. When Kennedy has had time to prepare for this, haven't we, Will? We were told this was coming, but oil perhaps a little bit less aggressively hit with the tariff at 10%. Talk to me about the flow of crude and product, most importantly about feedstocks and the flow across borders here. Will?
Canada is an extremely important part of the American oil system. Manus, America takes some 4 million barrels a day from its northern neighbor and refines them. So these tariffs will have a material impact. I think ultimately when people look at it, yes, it wasn't quite as severe as might have been expected. There is this carve out, as you mentioned, but ultimately 10% is 10%, and that cost will probably ultimately be shared between Canadian oil producers, who are likely to have to discount their crude to sell it into the US, and oil refiners in the US who rely on this crude oil and don't have many obvious replacements for it. In fact, the bigger market reaction, as we can see on our screens right now, is actually in gasoline, which at some point was up 7% this week, which tells you where the impact may lie. And I think for some regions in the Midwest, which is where refiners are very reliant on Canadian crude, this may quickly be felt at the pump.
And that is the political point that the president was making. In other words, talking about the pain, short-term pain that may be needed to be taken. Today is also very important in terms of the balance of the oil market. We have the JMMC, which is assessing, this is OPEC Plus, assessing where they are with oil. Halima Croft writes very delicately that this is, in Star Wars parlance, a signal to Washington. These are not the droids that you're looking for. OPEC really don't want to be any more in the sightline of President Trump than they already are.
Yeah, Trump has already talked about OPEC. It was definitely a theme in his first presidency, as you remember, Manus, and he's already called on them to produce more oil. Whether he keeps banging that drum, I think it will be important to see. OPEC won't change policy today, but it does have a decision to make in a month or two's time when it will review its current curbs or decide to put oil back in the market. Currently, it's scheduled to put some more oil back in the market. If it sticks to that plan, I think OPEC may argue that it's done what Trump has asked for, or is responding to the needs of the market and delivering supply as the market requires it.
Well, we're on a tear at the moment. We're up 2% on WTI and 1% on Brent at 76.46. Well, thank you very much for the recap. Good morning from New York and Bloomberg Brief. Risk off across all markets, equity markets, but the ground zero for the real reaction is this. You've got the dollar adding another 1% in the space of overnight. So you're up 2% in 6 trading sessions. The Canadian dollar is at a 2-decade low. And the pace, we wait to understand what the reaction function is from Mexico later today. The yuan, they let it depreciate in 2018. Will they allow the same again? Here's a look at the day ahead. The Israeli Prime Minister Benjamin Netanyahu is scheduled to meet with President Trump at the White House on Tuesday. Google reports their earnings on Tuesday as well. Very important. And the January jobs report, that hits the tape on Friday. All eyes down by the time we get to that. Surveillance is up next.